Duncan, and we're going to start out the gate today talking about foreclosures. Big misconception out there about how much or how long of an impact and how much of an impact a foreclosure could have on someone. There's no question it's a negative credit item, but the road to recovery for a lot of people isn't as long as they think. And there was some studies done recently, shared online. Florida Realtors put it out there and talked about basically how much your credit score gets affected. 7% of ex-owners have a credit score above 680 within a year after foreclosure. So it's deceiving
to me.
Yeah.
That's insane to me.
Well, and I'll tell you, the other part of it is 2% have one above 740. This goes back to realistically understanding credit and how many lines of credit, how long you've had credit, how many other negative items you've had. If that's the absolute only negative item and you have a whole bunch of other lines of credit, your credit score might not be that impacted. However, what does your credit score really mean? What does it impact? Because even though your credit score may be good enough, the fact that you have a foreclosure, especially a short-term, not very long ago foreclosure, no matter what your credit score, is still going to cause major problems with you getting a home loan.
Yeah, certainly. And I mean, a foreclosure is never a positive thing. It is a negative impact on your credit. But lots of people think they can never buy a home again, or it's 10, 15, 20 years, and that's just not the case. On a conventional loan, a regular conventional loan backed by Fannie Mae, Freddie Mac, it's 7 years. But for FHA and some of the government loans, it's only 3 years that can be there. In addition, there are times and there are ways within the system that we can do it. If there is an extenuating circumstance, a death of one of the people in the family, outstanding medical issues, things that happen, you can have an extenuating circumstance that can override some of those time frames.
Yeah, and that's similarly. I know that veterans have some things. If they're injured in combat, if they're sent overseas and something happens, there are a lot of reasons why a lender would still loan to somebody that has a recent foreclosure. For the most part, though, it usually means you're on the sidelines. But like we talked about, there are a lot of people out there. You mentioned 7 years. Let's think back about, when the market was at its worst. And, there are a lot of people that went through foreclosure and probably don't realize how much time has passed or don't realize that they can buy now, that their credit is likely recovered. As long as, again, the important part of understanding this is we're not saying if you had a foreclosure you can go out and get a loan in 2 years. We're saying you may be able to,
right,
depending on you doing all the other good things with your credit. Did you not miss any other payments? Did you not take out too much debt? There's still a lot of other variables there, but it doesn't completely strike you out of the process, like you said, with Fannie Mae, with FHA, 3 years for government stuff, again, outside of extenuating circumstances, and 7 years for, Fannie Mae and Freddie Mac mortgages. So there are a lot of people that can qualify again.
And I think it's important to note, too, the different, everybody seems to, if they lost the house, they lump it into foreclosure. But lots of times there is, in addition to foreclosure, people did a short sale or did a deed in lieu of.
Yep.
And if you did a deed in lieu or a short sale on a conventional loan, that time frame comes down from 7 years to 4 years. And so it's a much shorter time frame. And they say, oh no, we went through foreclosure, and then but you dig in more into the paperwork, and they in fact did a deed in lieu, or they did a short sale, and they just didn't realize it. They threw it all that.
And I think a lot of people don't understand the differences, and so just to kind of elaborate that, we don't talk about them much anymore because there aren't a lot of them anymore. But foreclosures, when it goes all the way through the judicial process, the bank sues you, the bank wins in court, the bank buys the property back, and then they own it. A deed in lieu is you signing the deed over to the bank and saying, in lieu of you going all the way through the foreclosure property process, I'm just giving you the property back. And sometimes they've done financial incentives for people in those situations because they don't want to go through the foreclosure process, the banks. And then thirdly, the short sales, when you put the home on the market in a proactive way to get the bank to accept less than what is owed, but not taking the bank all the way through the foreclosure process, and ultimately, for a lot of people, preserving and improving their credit because those late payments that stack up, it gets done quicker, than going all the way through foreclosure because there's less, missed payments. It's done a little bit quicker, so you can kind of recover a little bit quicker.
Right, absolutely.
So again, though, it may not have destroyed you. If you had a foreclosure a couple of years ago, depending on what kind of loan product you had, you might be back, starting to think about getting back in the game again. So don't think that that you can't ever buy again or that your credit can't be restored. Even if you haven't done much with your credit, there were a lot of people I know that went through the crisis and then stopped getting any debt. They said, you know what, I'm just going to only buy, I got so far in debt, I made so many mistakes, I'm only going to buy if I can pay cash for it or if I can pay out of my debit account or my bank account. And so the struggle with that is that your credit score might be artificially lower than it would be had you gone out and gotten some credit, because the only thing on your credit is the foreclosure and you haven't done anything since. So
yeah.
Part of rebuilding your credit that becomes an important part.
That's exactly what I was going to say. One of the things we do look at is, have you reestablished credit after an event? So you have a foreclosure, so you have an event that happens that's negative. Have you gone out and reestablished credit? And again, it's not as easy in the beginning. You might have to start small and whatnot, but have you built credit and shown that the ability to pay on time? So the algorithm that the credit reports use over time is very forgiving. If you can reestablish credit, make the payments on time, and show responsible use of the credit.
Yeah, and I think there's definitely a misconception out there with the foreclosures. People that went through it that don't realize they can buy again. They're called boomerang buyers. So they can swoop back around. They're ready to buy again. And there are a lot of boomerang buyers out there that haven't re-entered the marketplace that just don't understand, or unfortunately, that were taken advantage of through the downturn, and now they have this, wall up, towards mortgage lenders where they're hesitant to do anything because they don't want to get, some term in the additional terms of the mortgage that kind of screws them over. They want to make sure that, they're making a good decision and protecting themselves, and they just don't trust people now that they went through something like that. So definitely, important part of the home buying process is understanding your credit. I think there's also a myth out there from people understanding debt to income. Me, for example, we spend a lot through our business on credit cards. And, if I check my credit score, and we come really close to the max on a couple of the cards. If I check my credit score, a certain time of the month, before that we pay the bill in full every month. Before it's paid, my credit score is really low. Right. If I check it after it's paid, my debt to income now is all of a sudden down really low, and my credit looks great. And it's like, one of the things that's kind of frustrating sometimes is, can't they figure this out that every single month the bill is paid in full on time? Like every single month, like for years we've done it, but my credit score can vary by 100 points. 100 points from the time of the month I check it with the paying off of the credit card bills each month.
Yeah, credit utilization is something that they look at, and it's a big part of the score and everything else. It's
baffling to me. Like, I'll look at it and be like, well, if I check, and then a week later I check it, and it's way high again. It's baffling that there isn't an algorithm that says, okay, this dude's been doing this for 10 years. Like, he pays it in full every single month. But, and people have also said, oh, you could go to your credit cards and get higher limits and all that, which I'm sure I probably could, but I don't need it. So I don't really need I don't have any need for the credit right now. So it's
one thing, I think it's important to mention, the credit bureaus will tell you, and we tell people, when your credit is pulled, it's like taking a picture. It's one snapshot in time at a very specific time. And so if something just happened yesterday, like the balance is higher now and tomorrow you pay it off, if that is going to happen, you may want to wait, because when the credit is pulled, it's pulled on the day it's pulled, and it's a snapshot at that time. Yeah. And that's what we're going to look at.
Yeah, I think that's definitely something that gets misunderstood. It really can vary that much. I mean, my credit score, it's like a roller coaster. Depending on what day of the month, it's like, I'm going to check it, did we pay it? And then it takes a few days for it to report. So it's not like you pay it that day and then the next day you go check it. There's like a lag period, So it's definitely, definitely interesting. So you're listening to the Duncan Duo Real Estate Show here on 970 WFLA. When we aren't on air, make sure to follow all of our socials. We are at the Duncan Duo, Twitter, Instagram, Facebook, pretty much everywhere. We do take videos from the show and post them up on our YouTube channel and on Facebook so we can keep you informed.